Welcome. My name is Vicenteluz with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Lesson 10, Trading the Gartley. The down Gartley. A down Gartley is an up ABCD price swing movement inside an AB price swing in the opposite direction, where a Fibonacci retracement number, potential C and D extension number converge. That creates a potential bounce down and a trading opportunity. And Gartley was an individual who wrote a book, and it originally was called the 222 Gartley because it was page on 222 of his book, which is book sold in the 1930s for about $1,500. So it's a very valuable technique that repeats itself constantly. Okay, now we're seeing the market and we're doing our A, B, and we're in a downtrend, so we're looking for a C to go short. Now when the market does the B and it retraces, it's usually going to go in an A, B, C, D against the trend. And what we want to do, okay, we want to find, if we see the A, B, we're trying to see where's the C going to be. And it's usually going to be at the extension of this sub, what I call a sub A, B, C, D movement. And we can see it here. The first thing we're going to do is we're going to get our A to our B, and we're going to see our Fibonacci numbers. For example, here's the 618 near the trend line. So there's a very high opportunity or high potential that the market's going to go to the 618 and then extend down. Now, when we see that it did the AB and it did a small retracement down, look how we got full here at that 382. When it started doing a small retracement, we pull from this A to this B. It does a pullback, okay, and we're going to pull Fibonacci from this sub A to sub B and see where the extension, and we're going to see the extension of this A, B, C, D coordinates with the pullback of this A, B, and this might be the potential area where it bounces and then it extends down. Okay, so we see here, did the A, B, here's with the 618 retracement, and then if we did the A, B, C, D, here's the 618 extension. Look how the retracement is coordinating with the extension and a trend line. So here's where we want to enter short of the market. We're going to enter at the 618. We want to place our stop loss above the 8.6, okay, between the A and the 8.6, and then ride the extension to its extension. See how the market went to the 786, the 618, it coordinated with the trend line. We would have shorted the market here, and look how we had a nice profit all the way down to its extension. On an up Gartley, okay, an up Gartley is a down ABCD price movement inside a potential ABCD price swing movement in the opposite direction, where an A retracement number coordinates with an extension, where C coordinates with a D extension of a smaller movement, and it creates an opportunity. Okay, here's an uptrend. The market's doing an A, B, and we're trying to find the C. Look how we have a 618 here. And the market's doing a sub A, B, C, D. We want to find where the extension of this D coordinates with the retracement. So we're going to see this A, B. We're going to look for our C, and we see how it starts doing a small A, B, C, D against the trend. So we pull our Fibonacci from A to B, and here's the Fibonacci tool. We just put it from the low of A to the B, and we see that here's a 618. Here's the 50% retracement that it's coordinating with the 1618 extension, because now I have an A, B, where I could pull my Fibonacci from this A to B. The market retraced to a 618 means it wants to go to the 1618, and look how that 1618 and the 50 were converging. So here's where we want to buy and see if the market takes us our way. We will put our stop loss below this area. And as we can see, we had a nice profit. Look how it went to the pip. You're going to be surprised how effective this strategy is. And it went right to the pip. Look how the market went right to the pip of the 618. and there's where it bounced. It made a lot of buying pressure, and the market started rallying up to his extension. Okay, rules to trading a Gartley. We find all the trend lines, inner, outer, and long term. This will help you determine if you're in an uptrend or a downtrend. Obviously, we're going to signify a potential end of an uptrend or a downtrend. Could help you. Find the latest AB to project the C. Start spreading your Fibonacci tool from A to B to find where that C potential might be. And also find the sub ABCDs against the trend and pull a Fibonacci from those A to B and find where they converge, where's their Fibonacci convergence. And then we look for past levels of support or resistance to give us additional levels to bounce. We could also look for trend lines or pivot points. And we predict our D extension at the 127, at the 1618, or the 2618, depending on where's the next level of support or resistance and pivot points, and also Fibonacci convergences. We pull out our trader's checklist. We create a trading plan and trade that plan. If your stop loss is above the 50 pip mark or the 5%, it could be a little more than 50 pips. If it's still under your 5% rule, we stay out and we find another trade. Okay, my name is Vincent Luz with Forex Trading Institute, and I'll see you at the next lesson.